I'm going to take about derivatives and financial innovation shaping the modern financial landscape. So, it exploring how the sophisticated financial instruments have transformed risk management and created a new opportunity in the global markets. These are the moderns of financial landscape. The from ancient battle to modern contracts, it has a three types: ancient origins, commodity futures, and option era. First one is ancient origins. So, simple barter agreements and forward contracts emerged in Mesopotamia and ancient Greece, allowing merchants to lock in future prices. Commodity futures, standardized futures contract, it all debuted to the agricultural commodities. So, it's enabling farmers to hedge it against unpredictable price inflections. And option era, the 1970s introduced the option tradings and then providing a more tools for risk management and specifications. And explosive growth, the derivatives market today. So it has a three global OTC derivatives. It reached 7 to 9.8 trillion by June 2024, and market grew sixfold from 18 trillion 1998 to over 500 trillion in 2017. So exchange trade volume increased tenfold from 2002 to 2021. The four pillars of derivatives: futures, forwards, options, and swap. Futures and swap, standardized agreement, buy or sell an asset at predetermined futures date and price, traded on regulated exchanges. So forward, customized contract tailored to specified needs, similar to futures but traded privately over the counter. It is called OTC, and grant the buyer the right but not the obligations to buy, call, or sell an assets to specify a piece. And then swap, agreement to exchange cash flow, commonly used for managing interest rate or currency risk exposure. And then the power of derivatives, it has a key uses in finance. So hedging risk, corporations and investors project against adverse the price management it currencies. So it has a interest rates and commodities stabling in cash flow. And speculation, traders profit from anticipated market movement, potentially amplifying returns through leverage while accepting the higher risk. Price discovery, so the price discovery is collective market expectations, providing a valuable insights into future price movement and then a market state sentiment. And portfolio diversifications, it achieve a systematic risk, and then it acts as liquid market, enhancing a portfolio and then efficiency and strategic positioning. And financial innovation, it has a beyond the basics. So it has a three types: credit derivatives and structured product and digital innovation. So it's all depend on the instruments like credit default swap, CDS, export and disseminate information on bankruptcy prospects. So structured products, asset backed securities, ABS, tranche value securities, TVS, transform single assets into instrument which varied risk profile for a different investor need. So in digital innovation, blockchain and distributed ledger technologies are poised to revolution through the enhanced of the transparency and then efficiency. So the double-edged sword, innovations and systematic risk. It has a three complexity challenges. The nature of some derivatives can lead to mispairing and the mismanagements as dramatically ensured in the 2018 financial risk. So LTCM collapse, the failure of long-term capital management. It's called LTCM in 1998. It highlighted the systematic risk posed by massive derivative exposure across institutions and transparency gap, limited transparency in OTC market, particularly with the credit derivative, potential for a cascading failures and market breakdowns. And then regulations and involving trends. So regulatory response, it increase a systematic risk through the mandatory clearing and the reporting requirements. ESG integration, ESG linked derivatives and involving regulatory frameworks focused on sustainability and climate risk. So, tech advancement, technological innovations, and evolving market needs will shape the next generation of the derivative products. So, modern finance. It has a tool, essential tool for a dynamic financial world. Indispensable instrument, continuous innovations, informed navigation. It's all derivative are crucial for risk management, from credit derivatives to blockchain-based solution, and understanding both the transformative power and potential pitfalls in